Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, April the 8th. The year's 2020. Let's talk trading. Trading using price and horizontal lines. I saw some comments and I've gotten some questions. So I'm going to go over these things once again. But before that, of course, I need to remind you fellow traders that these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Okay? And when you're trading, always remember the risk management. Do not lose any more on any one single trade than you're willing to lose. Otherwise, you could blow your account. Okay, now somebody said something about there's all these indicators and it's all confusing. Well, okay. Yes and no. Yes, there's a lot of indicators, but not all indicators are created the same. Most of my indicators that you see are gauges, kind of like the dashboard of your car. You have gauges. Some of them are idiot lights. It's like when your car overheats, the light comes on, or you can see the actual temperature. And I think you prefer to have gauges than idiot lights. So that's what most of my indicators are. Now, the other thing is they say, well, you got all these methods and it's all confusing. Okay. The name of today's video is trading using price and horizontal lines, because my methods are based on price and horizontal lines. So the people who are new here, there's years worth of videos out there. So if you're interested in the buy zone, I don't know how many buy zone videos I've done. If you're interested in the rat zone, there's rat zone. If you're interested in the wick zone, there's a ton of wick zone videos. So that's where I explain them. I explain the math and statistics behind them, how I developed them, and then I show you how to use them. Okay. But yeah, you're right. In every day's video, I don't explain each and every nuance. So, for example, on the weekly chart here, the gap, it's like you have some of these pairs where the gap hasn't filled. And so all you're looking for is on the weekly gap, there's usually a difference between the Monday open and the Friday close. And that distance is the gap. And you trade from the open towards Friday close, and that usually results in some pips in your pocket because that gap almost always closes. Sometimes at the end of the week, they don't close, but just because it doesn't close doesn't mean you can't take profit either. Okay. So on this, and once again, this is just a chart showing the daily chart, but it gives you the perspective for the year. So you can see here, if I go back, you can see where the year started. You can see what price is done for the higher year. This is not to be used to trade anything. This is just, okay, where is price relative to the yearly open? Yearly high, yearly low. You can take a look here. So you can see here, as price was made a new yearly low right here. You go, hey, this might be a good time to reverse, and it would have paid off really nice. And once again, perspective. What do we have here? We've got the first day of the week here. This was yesterday. You see there was a nice breakout into where? The first day of the month range. And what happened? It fell out of here, dipped back in here, came out. And so you can see here, if you would have gone long right here, wow, pips in your pocket. But how do you do these trades? Well, once again, price action. Price either crosses a line or it doesn't. And in this case, it crossed the line. Did it close below the line? No. So here, price crossed the line. Did it close above the line? Yes. So it either crosses above and closes above, or it doesn't. or it either crosses below and closes below, or it doesn't. I mean, that is price action. That is the essence. And that's what you look at when you're trading these horizontal line methods. Inside bar. Once again, we have horizontal lines. So right here, we had the low of the weekly inside bar from 1 week ago, right here. And you can see here, it broke through it, but then it came back inside. So it crossed below, but it didn't close below. So as if you took that trade, it went as low as what? 07679. So you might have only gotten a couple of pips. Then you're out. Because these inside bars are breakout trades, not reversals. And you can see here on the gray, there's some inside bar trades to be had. Okay, previous days, high and low. Wow, the ranges have dried up. Look at that. We've only got 7 over 100. But you can see here, we have not broken out of the previous day's high or low. So basically, there's no trade on that breakout of previous day high low. Buy zone starts here. We've got the open +8, open +10 buy zone. Price entered. And if you didn't take your maybe 1 pip profit, you had to take a loss. But here on the short zone, if you entered short, you more than made up for the loss. And in fact, since the pivot was here and it hadn't been hit yet, you would not have taken this trade because we trade toward the pivot. And this is simply a target trade, meaning at the open, we're targeting towards the pivot. And so here we're waiting to get in the sell zone, and we would target that pivot. Here again, it got in the sell zone. Once again, it hit the pivot. But once it hits the pivot once, then it's like it's over. And you see here, you could have made a killing. But once again, horizontal lines. Price comes up. It crossed the line, but it didn't close above it. So what does that mean? It means price didn't close above the line, so it's not going higher than that line. What happened here? Price crossed below the line and closed below it. So price is lower than that line. Price is lower. So what's happening? Price is going down. Once again, it's really basic. You don't need a bunch of squiggly line indicators to tell you what price is doing. You can use your eyes and a couple of horizontal lines, and that's it. Rat zone. Okay, now one thing about the rat zone, guys, you really don't need much of a template because see the rat indicator, the rat zone indicator puts up just about everything on the chart. You see that? So really all you need is the rat zone indicator. You don't have to worry about the other stuff. And there you go. And so here you can see we came into the rat zone. Now, how do you get in a trade? And as I'm trying to get you guys to understand, the reason you enter the trade doesn't matter after you enter the trade, okay? I know that might sound funny or counterintuitive, but it doesn't. And if you're looking for that, what you're trying to do, whether or not you're trying to find something that's always going to work, and that's not going to happen. So what do we do in the rat zone? Well, there's many things to do. You can see price made a lower low, a lower low, a higher low. Maybe you jump in here. You got a red candle closes, green candle closes. You take a rat reversal, you go high. This is also a turn trade. You see it turn, you just enter right there on the turn. So or you see you have the 50 line, okay? So maybe you took the cross at the 40. You're just taking, 0 horizontal lines, a sweet spot type. Here, once again, price entered in the red rat zone. It's like, hey, you know what? It's leaving. I want to get on that ship, and you'd be up about 12 pips. This is all you have to do. And yet, horizontal line, even though these are actually diamonds, but right there, horizontal line trade. Did it cross above? Yes. Did it close above? No. So as it crossed above and now it's crossing below, whichever you trade in the direction of the last cross when you're doing horizontal line trades. I mean, if it crossed above, why would you go short? If it crossed below, why would you go long? Because when it's crossing the line, it's telling you the direction price is moving. It's one of those things. Are you smarter than what? Is it a fifth grader or second grader? I forget. Whatever that TV show is. So somebody will have to look it up. Okay, here's that weekly pivot. I think I called that out at the beginning of the week, and yesterday it hit it. I hope some of you guys got that pivot trade. Okay, on the daily, we took it out again. You see, yesterday we took out that missed pivot. On the week, we took out the pivot, so no missed pivots in 2019 or 2020 right now. So once again, statistical trade, it's a directional trade. We trade toward the pivot point from the open towards the pivot. Simple, simple, simple. I mean, there's really nothing else to explain, because once you get in the trade, it's all money management. And if it's going against you, well, has it hit your stop loss? Because if it has, then you need to be out. Not difficult. It really isn't. Traders, it's not. Okay, wick zone. Previous day's high, previous day's candle top, previous day's candle bottom, previous day's candle low. We got in here, and then it dropped out. Price doesn't like staying in the wick zone, and you can see it didn't stay in the wick zone. Walmart trade, once again, just horizontal lines. And you can see here we've got the above below indicator, and we've got the cross above below indicator. Real simple. So right now we're looking, there was a short trigger here, but it crossed below, but it didn't close below. So it came back. And so if you would have taken that trade, if you didn't take your, well, let's see, how much could you have taken off of that trade? Low 69. Maybe you got a pip. You probably didn't even get a pip because of because of spread. So you might have just had to take a loss there. That's trading, because now it's going the other way. The H1 candle color turned from red to green. Get out. Okay. And in fact, somewhere here, if price turns against, exit out with small loss. It's right there on the screen. Once again, price action. Just horizontal line trades, crossing above and either closing above or not, crossing below and either closing below or not. That is it. That's price and horizontal lines. I can't make it any more complicated, okay? Because it's simple. It really is. Anything else is just going to complicate matters. And here we've got the indicator in the TRO 2020 donationals that showed you how many times did price close between these two lines? How many times did it cross above it but not close above it? Here's how many times it crossed above it and closed above it. So here you can see, wow, 7 out of 11, it crossed above and closed above. So it crossed above 11 times, closed above 7. Not bad. And here we go. You just have a trigger right there. That's it. Or did you go long? You see, there's nothing to think about. There really isn't. That's it. That's the trade. So, fellow traders, just remember, It's not what you trade, it's how you trade it. So go out there and drain those banks.